Yes. Good morning, ladies and gentlemen. Thank you for honoring our invitation this morning. I would like to welcome you all to this press conference where BK Group will be announcing the financial results for Q1 2022. My name is Audrey and I will be moderating this session. So on this call, we have BK Group PLC CEO, Dr. Diane Karusisi, and BK Group CFO, Nathalie Mhaka, and they will be taking us through the financial performance of Q1 2022. After the presentation, we're going to have a Q&A session, and feel free to also drop your questions in the chat. But you can also raise your hand and we'll give you time to ask your questions. So without further ado, allow me to welcome Dr. Diane Karusisi for her opening remarks.
Thank you, Audrey. Good morning, everyone, and thank you for joining our earnings call for Q1 2022. We'll be happy today to announce very good performance for the first quarter of the year, with a net income increase of 40% year on year. You'll also see in the documentation that our performance quarter on quarter is relatively stable. And despite a very turbulent macroeconomic environment with high inflation, we believe that we'll still be able to meet our targets for the year. And our internal targets for the year are a 20% increase of net income year on year. And we believe that we are very much on track to meeting these targets. Nathalie Mhaka, my colleague, is going to give you the details, and I look forward to a Q&A session. Thank you.
Thank you, Diane. Good morning, and thank you for joining our press release. We are very pleased to announce that the first quarter definitely met our expectations. So we saw some good results from all our subsidiaries. The performance, although the first quarter is a quiet period for us, we saw very good top-line growth and also expecting to see some cost efficiency to bring us the expected profitability for the year. What we have in terms of main highlight on page 1, that's being projected, you'll see that our total operating income year on year grew by 9.1 and recurring cost by 49.7. We discussed last year the implementation of our digital strategy, where we went live with our core banking system in Q4, and earlier in the year 2021 we did go live with other systems like the financial system and HR system. So our system went live last year, hence you're seeing the pressure on the cost side when you compare year on year on OPEX. However, we are looking at some stabilities in the later part, in the second half of this year, in terms of OPEX and also our impairment. Net income was very strong, driven by, of course, a good growth from subsidiaries. We have 40%, we are returning 40% net income growth. On the page 5, you have the breakdown of our income statement for the quarter. You're looking at 9.5 total operating income. On the interest income side, we've indicated that we intend to go a bit slower on the loan book growth. We are focusing more on retail and SME strategy. And by that, we mean we will look at large corporate finance a bit more selectively. So we expect to see 10-15% growth on net interest income for the year, and on non-interest income, where we are pushing a lot on from all business front. We had 33% growth with strong growth on FX-related income. Our subsidiary from the general insurance also returning some good growth, although we are comparing it with a Q4 that is generally strong on the insurance side. So our target for non-interest income is about 50% growth year on year. But for the first quarter, we are very pleased to see some stability with a strong quarter like Q4. On the OPEX, as I mentioned earlier, 49.7% growth driven by activities, higher HR activity. So we had higher recruitment costs in the second half of the year last year. So on the IT and our digital factory costs remain our focus in terms of where we are putting the cost. And we also have some partnership increase in cost, like you saw recently as launching on the arena and others. So we are being very selective on cost increase. However, it's really driving the implementation of our digital strategy forward. Where we are particularly pleased for the first time is to report significant reduction and improvement in asset quality. We have we've managed to have for the first time a cost of risk that's below 1%. Our target for the year is to stabilize around 2% as we see a couple of facilities still in NPL and slow on the recovery side. But we are very pleased to already bring down our cost of risk from 3.4 last year to 0.7, 0.8, below 1% this year. So overall, we are pleased with the income statement side. On the balance sheet side, we have on page 6, you have total assets growing by 22.4%, higher than the banking sector average. We are looking at the average for the quarter on the banking sector, which is on page 2, 4.2% growth. We've managed to do 6.8% in the quarter. On the loans and deposits, very good growth year on year. So gross loan increased by 8.8%. We are targeting around 10-15% for the year. And on the customer deposit, where we are very pleased, to see the growth of close to 22% year on year. In the quarter, you have 5.3%. We are mobilizing most of this digitally. We are seeing good migration, focusing on digital migration from the bank perspective. And on the other side, in terms of liability mix, we will continue with the borrowings from banks and other financial institutions to manage our liquidity. Overall, very pleased when you look at ratios in terms of NIM. On page 7, you have our key ratios, profitability ratios remaining quite strong and improved when you compare with year-end 2021. We have our return on assets now at 3.8%. We expect this to be in line with FY21. On return of assets, we have return on equity strong at close to 22%. Our target for the year indicative was about 20%, so we are pleased that we will be able to surpass our budget. On the net interest income, we saw some decrease, 10.9, mostly linked to the change of systems. We expect to see also in the second quarter or third quarter of the year, the later part of the year, we expect to see improvement on our NIM. We are focusing on reducing the cost of fund, which is currently elevated, although in line with last year. We still want to see this coming down. The macro environment does not allow for an optimistic look at the moment, although we are doing all we can to reduce cost of fund and maintain our loan yield at around 15.5%. Cost to income ratio within target at around 40%, close to 40%, increasing from 36% in FY21. We expect this by year end, of course, to be in line and below 40%. Mostly, as you saw, the increase is coming from personnel costs. However, when you compare personnel costs on average asset, we are doing much better than last year at 1.9% compared to 2.2%. So the restructuring, when you compare quarter on quarter, is quite healthy. And on our liquidity, we still maintain very strong liquidity with liquid assets at around 38% of total assets. And when you compare our gross loan to total deposit, we have reduced this now to 87% from 93% at year end. So overall, asset quality is improving. We've seen also the banking sector returning better asset quality when you look at the consolidated number that we got from BNR. We expect to see some improvement as we recover from the assets that are currently non-performing assets. Cost of risk, as I said, annualized at 0.7%. We may see some increase in the range of 1.52% range. However, we are very pleased to see this below 1% for the first time in a long time. And our large exposure also well managed with our restructured loan on moratorium at below 2%. On the capital adequacy side, we've increased our core capital to risk-weighted assets to 24% from 21%, close to 24% from 21% last year. And we have our provisioning, when you compare NPL coverage ratio, improving to 128% from 124% at year end. All in all, we're very pleased. As I said, when you compare also what the market is returning, our market share remains quite strong at above 30% for all key metrics. And we are happy that the team will deliver on our digital strategy. From the insurance side, we are looking at diversifying the portfolio into new products for the general insurance. Our asset management subsidiary also doing great stuff in terms of advisory and new business opportunity for the year. We are looking at the BK Tech also bringing in more digital consumers. The partnership with BK Arena will also bring in more activities on the tech subsidiary side. So thank you and welcome all your questions. Thank you.
Thank you, Nathalie. So you're welcome to ask your questions. You can raise your hand and you can also put the question in the chat. I already have one question in the chat from Jackton Lawi. He's asking, what is BK's plan to counter the increased competition in its core Rwanda market as seen through the recent merger between a local bank and a major Kenyan bank?
Thank you, Mr. Lawi. Very good question. Indeed, this has been a conversation that we have in our boardrooms. How do we address increased competition in our market? We believe our strategy is the right one, going digital. Maybe you've also seen that we've started a partnership with BK Arena. We acquired the naming rights of the arena, which we believe is a major infrastructure piece for sports and entertainment in this city. And this is very much linked to our strategy to appeal more to young, the young population, the youth of this country. And as you know, the competition, in particular BPR, has been very strong in the retail market. And we have now a new retail strategy with a strong focus on digital, a strong focus on attracting the youth. And we believe we'll start seeing the dividends of these investments and this strategy that we're implementing in the coming months. So obviously, we are looking at what's happening in the market closely, but we are focusing on a strategy which is digital, retail market and SME market, and we see already early signs of success of this strategy. Thank you.
Diane, we have another question from Sabiti Daniel. He's asking, he says, good morning, BKCU and staff. The Q1 financial results look impressive. What would you say was the biggest driver of this performance? Is it the digital drive at BK?
Thank you, Daniel Sabiti, for your question. If you look closely at our results, you'll see that our cost of risk has reduced significantly. And that means asset quality has improved. We've seen a lot of upgrades for watch class to normal class. And this has helped us to reduce on our impairment charge. And this is the main driver of this very good performance. But across all our business lines, all our subsidiaries, we've seen growth also on the top line, which shows that we are very much upbeat. This is also reflecting the recovery that we see in the economy. Year on year, quarter on quarter, we are seeing economic recovery. We have a lot of government spending for the preparation of CHOGM in particular. And this is money that is flowing through the banking sector, through our bank. And this is also money going to our clients that are implementing a number of projects and contracts, in particular linked to CHOGM. So we believe this year, and CHOGM is a really big driver of the performance of the first quarter, but we're also very optimistic for the remainder of the year. We believe we'll continue to see growth despite, as I said and as Natalie said, a very difficult macro environment. We've seen inflation accelerating to 10%, close to 10%, and this is the first time we see such a high number in our inflation numbers, in the past 5 years or plus. So we are seeing now how we adjust our business to this new inflationary environment, but we believe again this is going to be contained in the next half of the year. We believe that we'll see inflation being contained around the same number. Thank you.
There is a question from Simon Kamuzinzi from Kigali Today. Aravuga ngo ndifuza incamake y'ibyatangajwe mu rurimi rwacu rw'ikinyarwanda. Mfite n'igitekerezo, buri gihembwe beka itangaza inyungu ikavuga ko yungukiye abanyamigabane gusa, ariko n'abantu tubitsamo abafashemo inguzanyo. Ndumva iyi nyungu yajya iba inkuru nziza kuri bose. Beka ishobora kujya ibaha ibihembo bito bito mu rwego rwo kubatera imbaraga no kubashimira. Nk'urugero wenda bakaba bahabwa agatike ko kujya gufata umugati w'ubuntu muri Simba. N'urugero.
Kamuzinzi, urakoze cyane. Nk'uko twabivuze muri iki gitondo, Beka yagaragaje inyungu yakoreye muri igihembwe cya mbere cy'umwaka. Bigaragara ko inyungu yacu yiyongereye ku kigero cya 40% tugeranyije n'ukuntu byagenze umwaka ushize. Ni ibintu rero bishimishije, nk'uko wabivuze, cyane cyane bishimishije ku banyamigabane ko iyo nyungu ni yabo, twebwe dukorera abanyamigabane, ariko iyo nyungu nayo ituruka mu gutanga service ku bakiriya bacu. Iyo twatanze service nziza, iyo twatanze inguzanyo nyinshi, abakiriya bacu nabo babyungukiramo, kuko akenshi nk'uko mubizi Beka itanga inguzanyo ku bantu bakora business, bakora ubucuruzi. Rero abo bantu nabo barunguka mu bikorwa bakora, bakungukira abanyamigabane babo. Kenshi nibo bonyine, iyo duhaye inguzanyo umuntu ufite business akunguka, bituma twese hamwe tutera imbere, abakiriya bacu batera imbere, Beka igakomeza gutera imbere, kandi itanga icyizere ko Beka igenda ikura, izashobora no gukomeza gutanga service mu Rwanda, bigatuma bitanga icyizere ku bakiriya bacu ko bafite banki ikomeye, yunguka neza, bituma izakura ku byo izakomeza gufatanya nabo mu mishinga bafite. So igitekerezo watanze ko guha prices ku bantu ni ibintu tuzatekerezaho. Akenshi nk'uko mwabibonye, twagize amasezerano na BK Arena kugira ngo ibyo wenda bitavuzwe cyane nuko ayo masezerano azatuma events cyangwa imyidagaduro na sports byinshi biba mu Rwanda bizajya bikorera muri Arena. Nuvuga ko abantu bacu, abakiriya bacu, abantu bo hano mu Rwanda bazabyungukiramo, ko bazajya babona ahantu bajya kwidagadura, kureba imikino ya sport. Twibaza ko bizagira inyungu abanyarwanda, urubyiruko, kandi n'ibyo bitekerezo ubu ngubu Audrey yabyumvise, niwe ushinzwe marketing, ubwo azatubwira uko tuzabyifatamo. Murakoze.
So there is a question from Shadrach. He's asking, the operating costs went up significantly. What is the bank's plans to check on this going forward?
Thank you very much, Shadrach. If you look at our OPEX, in particular the personnel costs, quarter on quarter it has significantly increased by over 40%, but not quarter on quarter. Year on year it has increased, but quarter on quarter is actually reduced a bit. So what happened is that many of our people, right after the upgrade of our core banking system, got promotions because they had worked very hard for the past couple of years to work on our systems. So many of these people, we believe, they've learned on the job and they deserve the promotion that they got. So this is the main driver. We are also hiring significantly in the areas of digital and IT because we believe that's the future of the bank. We want to be a digital bank. Maybe you've also seen that in our branches, we no longer have queues, and this is a result of the investment that we're putting in digital. Now, beyond the personnel cost, we also see a very drastic increase in our depreciation expense, because these systems, as we said, went live last year. So we were not depreciating for these new systems last year. Now we've started depreciation, and that's why you see this increase. So we expect, and this was budgeted for, there's no surprise for us. It's very much part of our budget. We expect this increase to come back to normal, in line with the growth of our business. And next year we expect it will stabilize as all our investments will start generating revenue or in terms of cost efficiencies, and we'll see this OPEX reducing in line with what we're seeing in the market. No more people in branches, and we are going to reallocate some of the people who work in our branches to work in sales, as opposed to be working in the cash business. And we hope that this will put back our revenue increase in line with our cost increase. Thank you. Maybe Nathalie wants to say more on that.
Thank you, Diane. I'll just refer to page 5, where you'll see our OPEX quarter-on-quarter, and you'll see that the 17 billion overall operating cost is actually in line with our previous four quarters. So you see 11.4 of first quarter last year being particularly an outlier. But when you look at post-COVID activities, we already started around 16B as of quarter 2 last year. The focus was, as Diane said, on digital and IT personnel cost, and also our OPEX that resumed, like travel and the consultancy project that we resumed last year in quarter 2. So we are expecting some stability around 15 to 17B OPEX quarter-on-quarter range, and that mostly for the next couple of years will be focusing on our people and also some partnership cost. Thank you.
The next question is from Jackton. What is the status of the bank's clients with regards to recovery of their businesses from the COVID-19 shocks? And also, what are going to be the key growth drivers for the banking industry in the rest of the year?
Thank you, Jackson. So we indeed see recovery. Nathalie said in her remarks that the rate of the percentage of loans that were restructured due to COVID has reduced significantly and is below 2%. We still have a couple of facilities, especially in the accommodation and hotel segment, that are still under moratorium, a COVID moratorium. But we are very much hopeful that with CHOGM this next year, in June, and the activity is picking up, we are very much hopeful that they're also fully recover. Now, for other businesses, I think activity is back to normal, as we said, and this is also reflected in the growth numbers that were published by the Statistics Agency. In terms of growth, I think we'll also benefit very much from a new program that was set up by government to further support recovery with a focus on a couple of segments, mainly manufacturing and construction. So there's a big program by government to support these sectors in terms of loans that will be at a subsidized cost. And we see a lot of demand from our clients, especially in the manufacturing industry. We have breweries that want to expand their capabilities because demand is increasing. And we hope that we'll be able to benefit from this growth. And we believe this is going to drive the growth that you'll see in our loan book in the second half of the year. Thank you.
Ikindi kibazo cya Simon Kamuzinzi arasaba ko mugaruka gato ku byiza beka izabonera mu kwitirirwa arena, hazabaho na financial services muzegereza abantu mu gihe hazaba habereye events cyangwa imikino.
Urakoze Kamuzinzi, amasezerano twagiranye na BK Arena, icyambere ko nabivuze bizatuma haberamo imyidagaduro myinshi, events nyinshi bizahuzamo urubyiruko n'abandi banyarwanda. So muri Arena tuzaba ducururizamo twebwe nka BK, hari wenda ko mwabonye ko garagaje karita nshyashya, ni Prepaid Visa Card izatuma abantu bose bayifite bazashobora kugura ibicuruzwa ibintu muri arena ku giciro cyiza, kandi ayo masezerano twayagiranye nka group, ni ukuvuga ko banki ya Kigali ibifitemo inyungu kuko izacuruza amaserivisi yayo muri arena. BK Insurance nayo ifitemo ubucuruzi kuko izajya itanga insurance ku bikorwa byose bibera muri arena. Muzi ko umuntu wese ujya muri arena agomba kugura tike. Iyo system yo kugura amatike izakorwa na BK Tech House. So twese nka companies turi muri group tubonamo inyungu kuko bizadufasha gucuruza cyane cyane ko brand yacu izamenyekana ikagaragara mu rubyiruko. Muzi ko urubyiruko ari rwo Rwanda rw'ejo. Niba tubona neza bazatugana kubaha amaserivisi yacu, nuko ko natwe tuzakomeza gukura, tugakomeza kuba ku isonga mu mabanki yose mu Rwanda. Murabibona ko turi abacuruzi, ntabwo ari amafaranga twatanze gutya, turi abacuruzi tubonamo inyungu nyinshi, kandi tuzagenda tuyibereka mu minsi iri imbere, mubona ibiberamo, mubona n'ukuntu abakiriya batugana kuko bakunze brand yacu cyane cyane urubyiruko. Murakoze.
Question is from Edwin Nashimwe. He's asking, mine is to find out what the bank is planning to do in terms of counter-attacking the rising inflation and the risk it currently poses.
Thank you, Edwin, for the question. Inflation is a macro phenomenon. It's not something that the bank only can address. But we are working closely with policymakers to see exactly what is causing the inflation, singling out the food items or things that are having an impact on the index, and see how we can support these sectors. Government has been a very strong supporter with the subsidy that the government has put on fuel and oil prices. When you look at the increase in oil prices on the international markets, that I think yesterday it had hit $100 per barrel of oil, which is the highest in a long time. All this price is not reflected in what we pay at the pump today because government has put in a subsidy. So I think this is going to be a main driver, and we're going to follow what the government and policymakers are telling us. We're also looking at how we can increase the working capital facilities for many of the importers of food, especially the food items where we see increase in prices. We want them to constitute sufficient stocks, so this also can stabilize and can fight, I think, the scarcity we see in the market, and we believe this is going to be it's going to be our contribution to stabilizing the prices on the market. Thank you.
Question is from Sol Wutera. Does BK Group still see net income increasing 15% this year, despite the global uncertainties?
Thank you, Sol. Yes, we are still very much optimistic that we'll hit a 15% increase in net income by end of the year. As I said, this will be driven by improved asset quality, and this is already seen in the first quarter. We are seeing some pressure, but we believe this is going to be contained, and we are going to remain at a cost of risk that is around 2.5%. The other thing that is important is that we are going to participate in the Economic Recovery Fund number 2, the second phase of ERF, and we see growth in our assets because of some of the facilities that are in our pipeline that we are discussing with companies in the manufacturing sector, and we believe these are also in nature of supporting the growth that we see for this year. Thank you.
So we don't have any more questions on the chat. If you still have a question, you can raise your hand. We have a question on YouTube from Isaac. He's asking, good morning, nice to hear from you. What are the opportunities for the youth, like as other banks around?
So thank you, Isaac. So maybe you've seen that we've signed a partnership with BK Arena. We believe it's going to be a good partnership for us to be more attractive to the youth. So because we are now specifically targeting the youth, we are working on a package for youth in terms of products and services that we'll be selling them to the youth. So one in particular that was launched last week during the naming rights event is a Visa prepaid card. So this is a product not only for BK clients, but anyone can have access to this prepaid card. And this helps you, obviously, do your transactions, in Rwanda, outside Rwanda, but also online. And something that is very interesting is that we want people to be able to transfer funds from the mobile wallet to their prepaid card. And this will help them, make purchases online, because you all know, as youth, you cannot buy things online with your mobile wallet. So we want to enable you to be, of course, more digital in the things that you purchase, even online. And we'll also be having more products. We'll be unveiling very soon financing facility for smartphones. We want more of our people, in particular our youth, to have access to latest smartphones, because we believe that not having a smartphone these days means being excluded from many things, and we want most of the people in Rwanda to have a smartphone. This is also one product that we'll be unveiling very soon with partnerships with a telco. So there are many things that are in the pipeline we're working on because we really want the youth to see themselves in BK for the services that they need now, but you also see them growing, saving with BK, and having targets in terms of growing their asset base. We want to see them working with us, because we believe that we have great things that we can help them for their own development. Thank you.
Ikibazo cya Simon Kamuzinzi saba ko mugaruka ku buryo beka irimo kunguka muri ibi bihe bigoye by'ubukungu. Ese abafashemo inguzanyo ntimuzabishyuza menshi bitewe nuko ibiciro byazamutse, ntibazishyura arenze ayo basabwe kuzishyura, cyane cyane abafashe inguzanyo y'imyaka myinshi?
Murakoze Kamuzinzi. Nkuko mubizi, iyo umuntu afashe inguzanyo na banki, hari amasezerano twandikirana tukumvikana ku mafaranga umuntu ufashe inguzanyo azajya yishyura buri kwezi. So amafaranga ntabwo ahinduka. Twebwe obviously tubihomberamo, kuko twasinyanye ko umuntu azajya yishyura amafaranga. Iyo turebye ayo mafaranga muri iki gihe byatakaje agaciro, ariko ku muntu w'umukiriya wacu abigiramo inyungu, kuko ya mafaranga yishyura akomeza kuba yayandi. So ikindi wenda navuga nuko muri iki gihe iyi nyungu tugaragarije biragaragara no muri economy, kuntu ubukungu bw'igihugu cyacu bwagiye buzamuka, cyane cyane muri iki gihe aho twese dutegura CHOGM. Hari amafaranga menshi yagiye agenda atangwa na leta mu myiteguro ya CHOGM. Aya mafaranga menshi yagiye aca muri bank ahabwa abantu bafite contracts kugira ngo twitegure neza iyo event. It's a big event, ni event ya mbere ndibaza mu Rwanda, ntabwo turagira event ingana kuriya. So ni ibintu byatumye abantu babona ibikorwa byinshi, byatumye abantu nabo bazabyungukiramo, kuko twebwe nka beka ntabwo twunguka iyo abakiriya batunguka, kuko murabizi iyo abakiriya batunguka ntabwo batwishyura. Ubu ngubu rero abakiriya tubona n'abakiriya bafite amahoteli batangiye kubona business, n'abantu ba tourists batangiye kugaruka mu Rwanda. Twibaza ko uyu mwaka hari ibibazo bya inflation nk'uko mwabivuze, ariko tuzakomeza gukorana n'abafatanyabikorwa kugira ngo turebe ukuntu twabikumira ubukungu bw'u Rwanda bukomeze butera imbere. Murakoze.
Thank you, Diane. So if there is any more question, we can answer it as we get closer to the end of this press conference. Thank you very much. We are not getting any more questions, but still feel free to contact us later on if you have questions. We'll help you get the answers. So as we get to the end, we would like to invite Dr. Diane Karusisi for her closing remarks.
Thank you very much, Audrey, and thank you all of you for joining our earnings calls for the first quarter of 2022. As we said, we are very happy with the performance of the quarter. We are still very optimistic that we'll hit our targets for the year 2022, despite a difficult macro environment. We believe we'll still, continue with a very disciplined execution of our strategy. We still believe the future is digital, and we've seen some dividends of our strategy very early in the year, and we'll continue to see them in the remainder of the year. We are very much committed to continuing providing the best services to our clients, and we believe that is going to keep us close to our clients, and eventually also is going to keep us delivering on the results for our shareholders. Thank you very much again, and I wish you all a very good day.